Well, it's a beautiful day down at the beach today. At last the sun's come out, and I'm sitting at a place called Suctions, which is a little pond that I used to play with my children at a very long time ago. And there are families and dogs and people playing all over the show. Sun's out, it's the last day of the month, so people have been paid their salaries, and all is good in the world. Or is it? Or is it? That's the question. So we're going to have a look at the charts, and I'm particularly going to focus on a couple of stock market charts, the NASDAQ and the S&P, which I think are really interesting going into the close of last week, and some data that's come out of the markets which might indicate some interesting stuff. So we'll have a look at that. And I'm also, of course, going to look at natural gas, and I'm going to look at gold and oil. Those are the positions that I'm interested in when it comes to commodities. Then I'm going to have a look at the yen pairs and see where we're going with the dollar yen, euro yen, pound yen, etc. And what noises the Bank of Japan and the Ministry of Finance over across the seas in Japan are making, and how that might affect the currency markets. Of course, anything that affects the dollar yen is going to affect the euro against the dollar and the pound against the dollar, and some of the minor currencies like the Canadian dollar and the Australian dollar, the Swiss franc. But before that, of course, I'm going to Jack's Bagels for a coffee and a bagel before we get started. So I'll see you on the inside of the charts. So let's have a look at natural gas very quickly. As you know, I'm long from $2.65, actually 6,450, and I've got a hedge just below that, 259, and we moved up quite sharply on Friday. It's now the weekend. We got up to about 280. Now we've got this level above us, this channel top, and above there, we've got a gap up into $3, which is what I'm looking at very carefully at the moment. This is the 4-hour chart. That's the top that we reached during last week, up against that channel top and that 280 level, just below this gap from $3 after we rallied back up there, back down to about $2.80. And we're at $2.80 right now, going into the open for next week on Sunday night in a few hours' time from now, my time. If we examine this on the day chart, you can see how this looks. So we had this big bearish day, consolidation day on Thursday, and then on Friday this rally back up to $2.80, just shy of this channel top, this upward channel trend line. And there's the move up to $3 that we had in March, and then the gap down to $2.80, which is exactly where the price closed on Friday, $2.80. Actually 277 or 279, depending on your broker. I think what we're going to see at the open is either a gap up through this channel top and last week's highs, taking us above this channel, above $2.88, and up to around about $3. That might take a gap up to, let's say, $2.89, $2.90 at the open, and then a move up during the early part of the week up to $3, where I'll be exiting my long position and potentially looking for a short position for a retracement back into this zone over here. I don't really want to predict that that's going to happen. I think that's a strong possibility, and a gap up above these highs, in other words, just to close that little bit there, above this channel line, and then a move up during Monday or Tuesday up to $3, and then a rejection from there would be very plausible, possible, and potentially even probable scenario. The other option, of course, is that we just open where we are at the moment and that we edge higher, dash into that channel top and this high at 288, and then eventually break through there and move up to $3 before a rejection. Or we could gap down, perhaps down to $2.65, 64, and then begin to move down into some of these lower levels before moving higher. So there are various things that could work out depending on how this week opens, and whether we see a gap up or down, we just open at the same price. I think there is quite a strong possibility that we gap up to above this channel top and move up to $3 before then hesitating, perhaps consolidating or collapsing back down from there. If that was to occur and we manage to actually move higher than $3, then our next target is $3.40, 50, 60 or 75 up into this region here. If I just zoom out a bit, you can see the 200-day moving averages also just creeping down into that zone. Talking about moving averages, below us we've got the 20 just curling up into the top of this pink resistance or now support level, and we've got the 50 now starting to curl up quite convincingly. After moving down and then flatlining for a long time, we've now started to move up quite beautifully. So we've got these two moving averages at the pink and the blue support levels below us acting as support. And of course we've got these levels, we've got the channel bottom, and then we've got the very strong $2.15 level, and then of course below that we've got $2, and potentially down below $2 we've got $1.80 and $1.50. I don't think we need to worry about those too much at the moment, because we're now trading around the top of the channel, and all focus is on whether we can break up through this channel top, last week's highs, and reach up to $3, where we'll have to see what happens. So that's the overall scenario for natural gas. And I think I'll feel more comfortable in outlining my strategy on natural gas as we move into next week. So all eyes right now on this channel top. Can we gap up to there, edge up to there, break through there, and reach $3 before deciding what to do? Or are we going to drift down lower at the beginning of the week into some of these support levels below us? We'll have to see how the market opens on Sunday. But for the moment, I'm holding my long position, and I'm willing to hedge that position at $2.59. That's just below these two lows, and look to add to the long side of that hedge if we get down into the 250 to 245 region, and potentially even a move down to about 230 now, somewhere near this channel bottom. So that's the overall strategy for natural gas, and there's really not much I'm going to do about it until we see how the market opens a little bit later on, and we see the opening gambits or the opening moves going into next week. So far no changes, just holding on to that position from $2.65 or slightly below that, and looking for a move higher, perhaps a gap up into $2.88, top of this channel line, and then a move from there up to $3, where I'll exit my long positions and then decide what to do thereafter, depending on price action and whatever else might be influencing the market in the broader economic macro structure and chaos that's going on around the world at the moment. I'm recording this, I'm just switching between the charts and looking at the second Ashes test. It seems to be pretty exciting. I'm not sure what's going on, but if you're interested in cricket, you can actually watch it on Channel 9 News for free in Australia. If you just use your VPN, connect to Melbourne, Australia through your VPN, you can sign up for the Channel 9 Sports and watch the cricket live over the internet. Just want to mention a couple of other things on these charts. On my commodities charts, we've got Brent crude oil and WTI on here. And for those of you who are trading this, and I know quite a lot of people are interested in oil, we're long on Brent crude oil and WTI. And this is how the chart looks at the moment. We saw in the second part of last week, the last 3 days, Wednesday, Thursday, Friday, WTI just beginning to move up and again holding above that support. I made a couple of comments in Twitter about I'll be absolutely amazed and surprised if we manage to hold above the $67, $68 level. We formed 1, 2, 3, 4, 5 lows at the same level and still seemingly holding above there. Overall, I'm kind of bullish on oil, but we've got this descending downward trend line, this red line to beat. We've got these two moving averages to beat. That's the 50 and the 200. But if we can get back up into that sort of level, I think we could probably get up to $84, $83 to $84. So far, so good. I think last week held up pretty well. We had this piercing candle pattern yet again at the beginning of the week, and two candles moving up with consecutively higher highs and higher lows. So overall, I think WTI is still looking quite good. Remember, a lot of this all depends on the macroeconomic environment in terms of supply and demand on oil particularly, but also what's going on in the broader market, which is really complete chaos at the moment and very, very difficult to understand where the money is going and where the flows are, where the investments are, where the market's likely to be bullish or bearish, etc. So all of these trades are really kind of in the ringer, so to speak, at the moment, and anything could really happen. But for the moment, as far as the charts look, I think we're okay on WTI. So long at around about $70, looking for a move up into initially around about $80, perhaps 77, the 200-day moving average, then $80, this downward trend line, and then about $84, this sort of plateau top here, this horizontal green line that I've got drawn across. And you can see that's a really important resistance level, I think at $84. So I'm really keen on the idea of us moving up into about $84. First, we've got to get up through the 50-day moving average, the 200-day downward sloping red trend line up into this green line, which is this horizontal line at about $84. And if we do get there and break up above there and hold above there upon a back test, a retest from the top, we may be able to get a significant rally on oil and move up into the high 80s and up towards about $100. So let's keep a very close eye on that. But for now, even though it's taking frustratingly long and electric vehicles are being pumped out by the hundreds of thousands day after day and stealing their share of the energy market from the automotive sector, I still think that we got a chance of this price of WTI and Brent crude oil rallying and moving back up into the levels that I mentioned earlier. I want to touch on Bitcoin very briefly. We're still holding below 31,000-ish. That's that red line above us. And we've just seen consolidation for a number of days. I think that if we can close above 31,000 or close below 30,000, let me clone this line and put it at roughly 30,000, which is the low of these candles, and then zoom in like that. So I think if we can close beneath there, it's not quite 30,000, it's 29,870. So if we can get a daily close beneath 29,800, 29,900, or a daily close above 30,800 or 900, in other words, out of this range, then it might be worth trading Bitcoin in that direction. I'm going to keep an eye on this and see what happens. I'm not too sure where Bitcoin's going to go. Again, a lot will depend on how the markets are going overall, how the dollar's going, how the stock markets are going, how the money markets are going, and how money flow is going overall. In principle, though, if I was to look at this impartially, this chart looks pretty bullish. We called the long down here at the bottom of this trend line, this consolidation area, all these reversal candles, this rising trend line, support, etc., 200-day moving average. We broke out of this channel, moved up to this high at 31,000, and we've been consolidating sideways in what looks like a bullish flag or a bullish rectangle. It's not really a flag because it's going across the page rather than sort of angling down at a 45-degree angle, which would make it more of a flag. This is a bullish rectangle. The reason we're struggling to get above there is simply because it's a really key area of supply and demand. You can see it was a major support level going back into 2021, an area of consolidation, resistance and support in 2022. We've tested it once before in 2023 already, and we're back at that level. But overall, if you look at this chart, it looks pretty constructive to me, and I wouldn't be surprised if we saw a move in Bitcoin much higher, up into levels closer to the $35,000 level, and potentially even the $40,000 level, which are some of the levels that you see over here on the left-hand side of the chart. But for now, I think it's best left alone. We could see a pullback into these supports, perhaps into this rising trend line if it just faffs around for a period of time and eventually drifts down, touches this rising trend line and moves up from there. Or we could see another dramatic move higher out of this consolidation rectangle, not flag, and then a move higher beyond 30,000, 31,000, up into the 35,000 or even 40,000 level. A lot of it depends on all of those economic factors, and right now there's a great deal of confusion in the market. Bitcoin, however, has been a shining light, and it's stood out above everything else in this latter part of the first half of 2023, despite all of the shenanigans, worries, and concerns with Binance and Coinbase, etc. And perhaps there's also an influence caused by the BlackRock ETF, which seems to be about to be approved by the US authorities. So that's it on those charts. I want to look at metals very quickly. We're long on gold. Again, I'm not going to go through this. Nothing's changed since my last video, which I'll link at the end of this one. If you want to see my views on gold and silver, that's these two charts on the top left. Have a look at the last video that I put up, which I will link at the end of this video. And I'll actually put a little link up to that video at the top of the screen right now as I'm talking. So we're long on gold and silver. I think those are looking good. Friday's close on both gold and silver looked really good, holding above those support levels. I'm not going to go into those analyses in detail on this video just to save time, but have a look at the video that I've linked at the top here and at the end of this video. The same goes for URA. We're long on uranium through the URA ETF, and we had a good close on Friday after a little gap up after Thursday on URA. Once again, that analysis is in the video that I've linked. So we've got NASDAQ and SPX. I'm looking to short NASDAQ, we're already short NASDAQ in fact, and I'm looking to short the S&P. We had a decent rally on Friday in both NASDAQ and the S&P. You can see NASDAQ's moved up to this previous high, potentially a double top. This is a resistance level that I'm really interested in on NASDAQ. And again, the analysis for this is in the previous video, which I've linked. So please have a look at that if you're interested in why. But we're short on NASDAQ already. This is the resistance zone that I'm looking at. And while we're talking about NASDAQ, I want to refer you to this tweet that I put up today, which refers to a tweet that I put up in February. And the tweet says this. I posted this in February this year. We're now at 15,200, the top of that red path in the February tweet. Is this going to play out, or are we going to melt up to a new all-time high? And the tweet that I put up in February says, strength in the face of all the wrong data points to a bigger rally followed by a calamitous collapse. The years of 2000 to 2002 saw two bear market rallies of around about 45%. This rally has been 22%, and that was in February when I posted this. We're now at about 45% on the NASDAQ. Therefore, we can't rule out a rally to 13,500 or 15,200. When I wrote this, everyone kind of poo-pooed it, and a lot of people said, well, that's ridiculous. We're never going to get up here on NASDAQ up to about 15,200. Well, we're there right now. And for the reasons that I analyzed in my last video, which are as valid today as they were in February, I think this might be the time for us to start selling NASDAQ. We're already short NASDAQ and looking to short the S&P index as well. So today there's a new video up by Harry Dent, who's been the sort of perma-bear predicting the downfall of the markets and the collapse of banks and the collapse of the economy, collapse of the US dollar for years and years now, perhaps even decades. I'm not sure how many times he's got it right, but he also said in this video, which I watched, that Friday, this past Friday, is probably the top in the stock market and that we're going to see a dramatic collapse going into this week. Now, I don't follow Harry Dent. I don't really watch his videos. I kind of glance at them whenever someone sends me one in panic. It seems to me that he's wrong most often than not. However, it's very interesting to see that he's picked the precise level that I picked out at 15,200. And actually, he's now saying that the stock markets are hitting a top today, going into this coming week, and that we're going to see a move down from this level. I did notice that comments are turned off for this video. In previous videos, he's copped rather a lot of abuse for his views on the calamitous collapse in stocks and fiat currencies around the world, which seem to be something that he says almost every year. I don't really know. I don't follow it too much. Just an interesting coincidence. So let's have a look at the S&P index. Again, I'm going to refer you to last week's video. It's not because I don't like talking to you or that I'm bored of doing this. I love doing this, but I don't want to repeat what was in the last video, and I want to keep these videos as short as possible. They do tend to get a little bit lengthy, but we're looking to sell the S&P index into somewhere around about where we are right now. This level above us in this gray zone and this pink zone, going across to the left and around about the 78.6% Fibonacci and key support and resistance levels within this zone, this rising channel top, etc. This is the area that I'm looking to sell S&P into. And you can see ideally we'd get up just into this gray zone here, up to this channel top, maybe just make a slightly higher high. We've already broken above that previous high, making a new high this year for the S&P. And I'd like to see us just move up into about 4,480 up to maybe 4,520, 4,540 for us to start fairly vigorously selling the S&P index. And of course, along with that, we'll go various stock names as well. So consequently, along with that, we're looking to short Apple, Nvidia, Microsoft, and AMD. Those are the names that got picked out. You may as well throw Tesla into that mix. I don't really trade, I call Tesla a meme stock. Don't really trade meme stocks. Tesla could be considered to be one. And there's a lot of hype and mania around electric vehicles and also Tesla's rollout of charging points to other manufacturers. I'm a little bit skeptical of all of that. And I think we could put Tesla into this basket of tech stocks that I'm looking to sell. So I'm already short NASDAQ, looking to get short on S&P and then also short AMD, Microsoft, Apple, Nvidia. I think the timing is right, the chart levels are right, and the economic macros are right for a sell-off in the stock market. Having said all of that, and I want to be very clear about this, we've got all of this money that was built up during COVID when people weren't spending money on services and on travel and on fuel, which seems to have been stored in the system. On top of all of that sort of storage and saving of money and surplus cash, the Fed also printed trillions of dollars to try and prevent the collapse of a world economy during a once-in-a-100-year pandemic. So we've got all of that extra liquidity that was inserted into the market, all of the money that wasn't spent on goods and services and traveling, remembering that services, including traveling and holidays, fuel, all that sort of thing, could be lumped into the same category. People weren't spending money on that, which makes up a very large portion of the overall economy, around about 65%, I believe. All of this extra money that was printed, liquidity inserted into the system, and all of that money still seems to be floating around, and people still seem to be investing in stocks. It doesn't seem to be a worry in the world when you look at it on the surface of things. On top of that, we've got big money, funds and institutions driving up these stock markets, and we've also got this sort of new mania around AI and chip stocks, adding fuel to that already raging sort of fire. So that means that these markets could continue to rally and melt up, potentially even to new all-time highs and even further than that. So I'm not negating all of that. I'm just saying that if this market is going to turn around, before we get to those even more extreme levels, now's a good time for that to occur, especially now that a lot of stock market bears, including a lot of big money bears, have been caught offside. People are starting to hedge. People are starting to panic, the people that are short, and there's an enormous amount of optimism and greed and FOMO being inserted into the long side of the market. And I think all of that makes for a deadly cocktail for a potential collapse. Now, either we're going to see this market melt up to new all-time highs, or we should see it turn around pretty soon, if not now. I'm betting for the moment on the short side, and that we'll get a turnaround. And even if it's just a temporary pullback, these markets need it just to ease off, to cool down, pick up new liquidity, new buyers lower down, to stop out some of the latecomers, the over-exuberant FOMOers, and all of the retail money that's come in at the last minute. Some of that's got to be cleared out no matter what, I think. If that starts happening and the algos get a sniff of it, and some of the institutional and fund money that's in these bullish markets start to take some profit, then this house of cards could actually collapse faster than expected. If you consider the macroeconomic environment that we're working within right now, this rally is quite stupendous. and I dare say even potentially fragile. I talked about Apple moving higher on very low volumes, just edging higher over the last week or two, and you can see that was the case. But Friday's gap up and rally took place on very significant volume. Now, either that means that this market's poised and geared to move much higher. Remember, Apple makes up a very large part of the NASDAQ, so Apple kind of leads the way. It's a $3 trillion name now. And I think having burst through that $3 trillion level added enormous impetus to this move up. A lot of volume came in. So either this is a blowout top spike, which could go a little bit higher and then collapse back down, or this is a fresh move higher, and Apple's destined to move up to $200, $210, $220, $250, $280, until eventually, at some stage, it runs out of steam again. It did look like it was running out of steam up until Friday, but once we had that $3 trillion in sight and we burst through it, there was an awful lot of Johnny-come-lately buying, FOMO buying, excited buying, greed buying that came into this name and pushed it higher on very significant volume, as you can see at the bottom of this chart. I'm going to spend 60 seconds talking about the yen pairs. We've got Bank of Japan making even more noises about intervention. They're actually talking about directly buying yen and selling off dollars. I wouldn't be surprised if we saw a gap down on dollar yen tonight, and perhaps when the Japanese market opens in about 6 hours' time, that there's some sort of intervention. I don't know. Often they do this sort of thing at sneaky times of the day when volumes are low, and their buying sprees of whatever side of the market they're buying has a bigger influence on the market. And that's often very late on a Sunday night European time. But there are definite rumblings from the Bank of Japan that intervention is very imminent. We did touch the 145 yen to the dollar level, fell back from there, not very convincingly. But whatever happens to the dollar yen, it's going to influence all of these, so I'm not going to talk about these too much. We'll just have to wait to see what happens. But they all tried to get a little higher and fell back in line with the dollar yen trying to do the same thing. I expect that there will be some intervention, and a lot of that will also depend on what happens to the dollar overall. I'm not going to show you the dollar index on here, but I'm going to show you my euro chart on here. I just drew this up in consultation with Lee over at MKT Redline. I was discussing with him what MKT has to say about the markets and how that aligns with my more old school traditional charts. We've come up with two paths really, and my charts are a little slow. So these are the two paths. We've got a potential head and shoulders formation going on the euro against the US dollar. I have a feeling that we've got two potential paths. I kind of think they're equally weighted in terms of probability. So we've got a potential move up to 1.16, which is this downward trend line. I'll zoom out in a second. Or a continuation of this edging down, back down to about 1.05, which is the bottom of the recent move down during 2023. So we've got two paths here, and I know that's not very helpful at all, because one's going up, one's going down. I think anyone could say that. The market might go up or it might go down. I kind of favor this green line to move up to 1.16, and then who knows? Move back down again, probably from there. But there is a possibility that will move lower, all depending on what happens with the dollar. Now, we've seen reasons why the dollar could strengthen, and we've seen reasons why the euro and the pound and the other currencies might strengthen against the dollar. And it's all got to do with economies and central bank policy. So we've got hawkish talk from the central banks from both sides, but we've seen inflation in Europe and in the UK far exceeding the inflation numbers in the US, which seem to be dropping quite dramatically. We saw some really good numbers coming out on the inflation front in the US last week. However, can we believe these numbers or not? I don't know. I'm skeptical. In fact, can we believe any of the numbers that come out, including jobs and GDP and the definition of a recession and any number of bits of information that we see from various governments around the world? I'm not too sure if we can trust any of it, to be honest. But that's all we've got to go on. And at the moment, it looks like all the central banks are kind of equally hawkish. However, we've seen an improvement in inflation in the US, which gives them a little wiggle room to slow down on rate increases. And we've seen a worsening in inflation in Europe and the UK, which would seem to mean that they might need to tighten rates even further and more quickly. But the economies in Europe and the UK are not as strong, as resilient as the economy in the US. So we think, from the numbers that we get fed week in and week out, and the numbers which we know are potentially perhaps nefarious. I need to be a little bit careful, I think, about what I say on YouTube. I don't want to be kicked off YouTube like all the others for allegedly spreading conspiracy theories and fear-mongering and discrimination against whoever and whenever. I don't want that to happen to me, so I can't be very blatant about the way I feel about the numbers that we get fed. So we'll have to just take all of that with a pinch of salt and try and discern the best we can from the charts that we see in front of us. I think euro might go up. or it might go down. I'm not committing either way. I think if you had to poke me and prod me and force me to put money on this, I would go with the green line, the euro up to this downward descending trend line. In other words, a weakening in the dollar, strengthening in the euro. And that would take us up to this downward trend line. And then I expect the euro to continue from there into its downward course. However, as I'm telling you this, it kind of doesn't make sense. We're literally seeing recession in Germany, France on the brink. We're seeing riots in France, nothing directly to do with the economy, but it's all part of the same scenario. We're seeing the UK with inflation over 10%. We're seeing debt and credit card commitments under pressure. We're seeing jittery housing markets across the region. Not in the US, of course. The US housing market's apparently booming, along with the jobs market for some unknown reason, even with all these layoffs. And we've seen the US banks being given a perfect bill of health on top of all of that. So I really don't know. I think it's really anyone's guess. When it comes to the major currencies, that's the best I can do, I'm afraid, at the moment. We'll have to just play this as we see it and watch for chart patterns, watch for familiar levels, look for reversal patterns, perhaps move into shorter term trading, less longer term swing trading, more shorter term swings, bit of day trading, and just play these markets as we see them unfolding on the slightly shorter term charts rather than trying to pick longer term directions. Well, that's it for now, folks. I think that's the best I can do. So in summary, we're waiting for natural gas to test this 288, 290 level, perhaps reach up to $3. We're going to wait to see how the market opens. We're long on WTI and Brent crude oil. Bitcoin looks like it's forming a bullish rectangle. We'll have to wait to see which side that breaks out. When it comes to metals, we're long on gold. We're long on silver, we're long on uranium, all pretty simple. We're not trading copper at the moment. When it comes to stocks, I'm looking to sell NASDAQ and S&P into levels ever so slightly higher than where we are at the moment. And my view on Nvidia, Apple, Microsoft, and AMD remains short. And potentially you could add Tesla into that, although as I said, I'm not really into meme stocks. And bear in mind, there's an awful lot of hype, greed, and FOMO around all of these tech stocks, particularly the semiconductor chip stocks, and Tesla with its mega factories going up all over the show and its charging stations being made beautifully, democratically available to everyone else. When it comes to currency majors, well, we've got this picture here, potential head and shoulders with a move down, or if that doesn't happen, a move up to 1.16 on the euro to touch the underside of this downward trend line. Either one of those could happen, and I have no clue which one it is. Well, I hope you found that enjoyable. Have a fantastic trading week ahead, and I look forward to updating you through this week on oil, gold, natural gas, stock markets, major currencies, and cross currencies. So keep an eye on your alerts and press the notification bell, which is on the screen somewhere if you haven't done so already, and YouTube will let you know the moment I upload a new video. I'll speak to you soon.